arguably the most vital pillar in the ICT trading methodology. And it manifests in two primary forms: buy-side liquidity and sell-side liquidity. So this is something that most of you know, but you don't know where to find the right liquidity. You don't know which liquidity you need to trade. This is what I'm going to tell you today. I'm going to tell you exactly where you can find the right buy-side liquidity and exactly where you can find the right sell-side liquidity. Let me explain real quick for the people that don't know what buy-side and sell-side liquidity is. So basically, buy-side liquidity is a threshold on the chart where short sellers set their stop positions. So the stop losses from people that are going short, this will be called buy-side liquidity. Sell-side liquidity reflects the inverse scenario, defining levels on the chart where long bias traded positions have their stops. So in both scenarios, these levels frequently align or are in close proximity to market extremes. So traders often perceive these extremes, situated at the upper and the lower bounds of price ranges, as zones where their trading decisions are put to the test. So basically, we as ICT traders, or we as smart money concept traders, we see these buy-side and sell-side liquidity zones. And we assume that there are the stop losses of basically the traders that are taking the trades the opposite way of us. And because there are so many stop losses in these zones, there will be a lot of liquidity available once these stop losses get hit. Now, how do we trade the right liquidity and where do we find this liquidity? So basically, I want you to do a couple of things. I want you to mark the weekly high and low, I want you to mark the daily high and low, and I want you to mark the previous session's highs and lows. And in this video, we're going to use the example of trading a New York session. This will be your Asian high and low, and this will be your London high and low. Your Asian range is from 6 p.m. to midnight, and your London range is from midnight to 6 a.m. You have marked everything out. Now, when do you enter a trade? Basically, whenever one of these zones get hit. But there is a very important thing to this. You're not going to enter it every single time it gets hit. You're only going to enter it whenever it gets hit between 7:30 and 10:30 a.m. New York time zone. This will be your New York kill zone. If you have followed ICT, you have heard about the kill zone. This will be this one. Okay, now you briefly know where to find liquidity and when to enter the trade. I'm going to give you a liquidity strategy that we're going to backtest together and that you can backtest yourself or use inside of the markets. Basically, we want to see price hit one of our liquidity zones and we want to see a market structure shift. Then we're just going to target 1/2 risk to what if we are against the daily bias, and we're going to target the next liquidity zone with a minimum of 2 risk to what if we are trading with the daily bias. Now, if we're trading with the daily bias and the take profit is larger than 2R, we're going to take 50% off at 2R and put our stop loss at break even. We're only going to be risking 1%. Of course, this is different for everyone. This is different on your situation. If you're trading a challenge, I would say risk less. If you're trading your own personal account and it is not that large, I would say risk a little bit more, right? So risk is subjective to your account size. Now we'll be going inside of the charts. I will show you some hindsight results first, and then we will go over some backtesting results afterwards. So guys, I've prepared two examples for you to basically explain the theory a little bit better with real life examples that I took from the charts, and these are charts from last week. Both of these charts are on EUR/USD, is irrelevant, but I know a lot of you are going to ask this, so here you go, it's on EUR/USD from last week. So as you can see, I've marked out the areas that are not taken out yet. So you have the previous day high, and as you can see, the previous day high gets taken out in London, but I still marked it out. You have the previous day low, the London low, and the London high. The weekly high and low were so far off that I didn't mark them out in this example, and basically the Asian high and low were also taken out by London already. So as you can see, the two red lines are basically the trading window that we are going to enter in. So it's 7:30 till 10:30 a.m. So then if we go a little bit further, and this is a very wide frame, but if you can see on the right, we are taking out our London high. And I'm going to zoom in a little bit, so that as you can see, this is the image zoomed in. So whenever we're taking out the London high, we want to wait for this market structure shift on the 1 minute. And as you can see, we get that market structure shift right there on the left. And then I'm basically searching for a fair value gap to enter from. You can also enter right away. I like to have a little bit more confirmation, so I wait for that fair value gap, and then there is where I basically enter. The first fair value gap that I encounter, put my stop loss above the swing high, and then I target the next liquidity low. Then we have our next example, again on EUR/USD. I marked out the London high and the London low. I marked out the previous day low. The previous day high was very, very high, so I didn't mark that out. It didn't make sense in this case. We go into our red lines and we zoom in. As you can see right here, market takes out our London high. We have our market structure shift right there on the 1 minute. We are left with two fair value gaps up there. And basically I enter on the first one that I encounter, since I think the stop loss was around 5-6 pips. So if I have room to enter lower and basically give it more room to play out, then I'm happy to do that. And then I'm targeting basically the first first low that I encountered from London session. As you can see, the London low was a very long, because as you can see, the London low was too far for EU. Okay, so right now I loaded on a session on FX Replay. We're going to put this strategy to the test by backtesting it again on Euro USD. I've also loaded in some indicators into FX Replay, and the first one is the fair gap indicator. So every time a fair gap forms, FX Replay will mark that out for us. Then we have the session indicator. These are these orange lines right here when a new day starts or when the current day ends. Then we have these blue and green boxes. The green box is our Asian session, so that we can easily mark out the Asian highs and lows, and this blue box is the London session, so we can easily mark out the London highs and lows. Then we have this gray box. This gray box is basically our time of entry window, so this is our kill zone from 7:30 till 10:30 a.m. UTC -4. So let's see how this strategy is going to perform. And as you can see, we're on the 15 minute right now, so I am going to go to our entry time window, and that is right here. We have already taken out our London highs right here. I hope I'm not too late. Let me mark this out real quick first. So as you can see, I marked out the London high right here, and now we broke the London high with displacement. We came back down, so we had our market structure shift right here, and now we are going to search for an entry. As you can see, we have a lot of fair value gaps right here, so we are going to take a short position, I would say, on this fair value gap if it gives us enough room. It does, so let me do it like this, and then we're just going to target a 1/2, I would say, something like this. Place the order 1% risk. So you can see we got tapped in basically right away. Now we're waiting for it to hit our take profit, and there it goes. Take profit hits around like an hour and a half later. So this was our first trade, and basically we're done for the day. So I will be skipping through it a bit now to the next session. Okay, so this was the previous day, and as you can see, the new day has started. Now we can mark out our Asian lows right here, and then we can mark out our Asian highs, but our Asian highs have already been taken out by London, so there's really no point. We can mark out the London high and low. Then I'm going to skip to our entry time frame. Okay, our London low is a lot lower right now. Our London high is also changed. We are just going to follow the highs and lows right now. So now there is something important that I didn't tell you before. We can take out the London high right after London before our entry time frame, but we still need to be around that area to enter. So let's say, for example, take out the London high right here, and we go here, and this is our entry time frame. We're not entering. But let's say if we take out the London high and we keep like consolidating right here, we can still find our entry. So hopefully this is the case right here, since we are taking out London high already at 6:30 a.m. So let's go to the 1 minute already and skip through like this until we are at our entry time frame. So you can see we are consolidating right here, and that is something that often happens, that you take out a previous high or you take out a previous low and you keep hovering around the same level basically. So right here we have taken out a London high, we have created basically change of structure, we have the market structure shifts, and we have a lot of fair value gaps right here. So what I'm willing to do is I'm willing to enter on this fair value gap. I think this one is still high enough. We put our stop loss above the high. It's 7 pips, so we give it a bit more room. We give it 9 pips, and we target a 1/2 again. So it is this trade. Now place the order, 1% risk, and let's see what's going to go. Okay, so we are entered in the trade right here. I was a little bit early right here. Oh no, it's a fair value gap. It's a fair value gap. It's no worries. We are still tapped in inside of our range, so that's good. And we are tapped out right here. So we have 1 win, 1 loss right now. And let's go to the next day already. So we're now at the next day. This is our London high. This is our London low. This is our Asian low, but it has been taken out already. So I'm going to put this as the Asian high. Then the Asian high is basically also our previous day high, so that is perfectly fine. And our previous day low is all the way down here. I don't think this one will be hit, but let's mark it out anyway. So let's hop onto the 50 minute and let's skip through until we are at our entry time frame. So it's now 7. And the next candle will be 7:30. So as you can see, London low was all the way down here and has already been taken out right before our entry time zone. So let's go to the 1 minute and let's wait for our entry time zone to occur first, or that's literally the next candle. So it's this one, and we've taken out the lows right here. So what we're going to do is, again, we're going to take our long position from this fair value gap, the first fair value gap that we encounter with this displacement move right here. Since we have a lot of room anyway, so from here to here is only 7.5 pips. So let's make it 9.5 pips. We're again giving a 2 pips wiggle room, and then we just target a 1/2, or if you're really ambitious, I would say you can target these highs or maybe even these highs, since the overall trend is quite bullish. But let's just make sure that we are taking a W right here, and let's just target it 1/2. So let's place the order. 1% risk. Okay, we're tapped in right now. Ooh, some dangerous play right there. And we have our take profit hit. 1/2 hit, so we have 2 wins right now and 1 loss. So this was a trade for the day again. We are going to the next day opening. Now we are marking out the London low. We are marking out the Asian high. We're marking out the current London high, as you know, it's still in the process. Then our previous day low was basically the same as our Asian low, so I'm only going to mark out that one. Maybe also let's pay some attention to our weekly highs and lows. So as you can see, our weekly highs are all the way up there and our weekly lows are all the way down here. So there's basically no point in me marking them out right now. First of all, we need London to end, so let's wait for that. So London is shooting up and London has ended right here. So you can see London high shifts all the way up there. So now London high already gets taken out after 6 a.m. So maybe that is something that we can act on afterwards. So we are waiting now for entry time frame to occur, and that is right here, 7:30 a.m. So as you can see, we have taken out our London highs, and again, like I said, if we are in the same area, we can take that trade. Now we did have a market structure shift right here. I would say maybe let's wait for some more confirmation as we're still in this consolidation zone. I would really like to take an entry right here, and this is only a 4.5 pip stop loss, so let's make it 6.5. But the only thing is that we did break structure right here, but we only did break it with a wick. I think it is a little bit more dangerous than if you have a full body candle close, but let's see what we are going to do anyway. Let's just target at 1/2 again. I think it is going pretty nicely for us right now, and let's see what it is going to do. So we are tapped in right here, and we are stopped out. So maybe I should have waited for a market structure shift to happen. Let's see if it happens right here. Here we do have that market structure shift, and I'm going to allow myself for another entry. We don't have a rule that we're not able to take another trade, and unfortunately it has already been tapped in right there, but let's just see what it is going to do with this 10. So let's take 12, then 1/2 target. I hope I'm not wasting all of our profits right here, but I think this setup still looks very, very valid, and we were just a little bit too early by not waiting on that complete market structure shift. I would say really wait for that body candle close to be 100% sure. So we're tapped in right now, and let's see. We're consolidating a lot. Hopefully we can go down afterwards. And stop loss has been hit again. This was a wrong one on my end. 2% down after this setup, but it's not a big deal. Let's go to the next day. So we came to our next day. Asian high is right here, London high is right here. As you can see, Asian high has already been taken out, so there's basically no point in me marking that out again. London low is right here, then our previous day low is also still at the same place, and our previous day high is all the way up there. So then we are waiting for our entry time frame to occur, and as you can see, previous day high has been taken out in London. London session high is right here, and this is already our entry time frame. So now it is for us to wait until one of these gets taken out again. Basically the only one that holds stands is the London session high, so we're waiting for that to happen right now. Let's see, it's now 9 a.m. we have time till 10:30. Okay, let's see. And there it is. It is taken out right now. And basically I would say, since we are leaning till 10:30, whenever we get the market structure shift right now I'm entering, if it is from 10:30 till 11, somewhere around there, I would still take the trade, to be honest, since I just want to see my entry form inside of my kill zone. I'm afraid right now my entry will form in my kill zone, but I won't get tapped in my kill zone. So I just want that entry to form in my kill zone, if it is even going to happen, of course, since it is still blowing upwards. So we have a low right here. If this low gets broken, we can call this the market structure shift. It doesn't. It just keeps going up and up and up. Let's go to the next day. There's another trading day for us. This is our current London low. Then this is our Asian high. This is our previous day high, and our previous day low is down here. So right now 6 a.m. has passed, London low has been broken. We are going to the 1 minute. We want to see our entry time frame occur. That is the next candle, literally right here. So we are entering on this fair value gap, and as you can see, guys, at the bottom it's 7:30 on this candle, so we can enter now. Our stop loss is 4.3 pips, so let's make it 6.5, and let's just target a 1/2, or maybe even let's target these previous highs right here. You could also target these ones. Let's do this one, and let's maybe keep an eye on when the 2R gets hit. So that is right here. This is 2R, and we are targeting these highs right here. We are tapped in. We are consolidating. Ooh, okay, 2R has been hit. And our original take profit has also been hit. This was a very, very fast trade. So yeah, guys, we've backtested around a week. We had 6 trades in total. We had 2 losing trades in one day there. And we had the 4.3% return. A win rate of 50%. And those were the results right here. Wednesday was a very good day, as you can see. And these were the results. We had a win, we had a loss, we had a win. Then we had 2 losses on one day. And then we had a big win afterwards. Guys, if you want to check out Epic's replay, there's a link in the description. Use the code JORAFX for 15% off your subscription. Hopefully this video was learnful to you, and I will see you in the next one. Bye bye, guys.